Good evening, traders. I am Devang Mehra from the Financial Analyst, and welcome to the Bold Project. This is the part two for the risk reward, profit targets, and stop loss series. So, in the last video, we talked about the example of TCS. I want to show you 4 or 5 more examples so the concept will get clear in your head, it will get drilled in your head so that you don't make any mistakes. If you still are not clear about these concepts, you can write to us on WhatsApp, or you can attend our doubt clearing sessions, which are live over the weekends. Let's start with an example of Axis Bank, a very good private sector bank I like to trade. Right, these are the charts of Axis Bank. You can see in the periods from October all the way to February. So I'm currently in the daily charts. This means I'll be doing some kind of a swing trading. I'm holding for a couple of days. That's basically why I'm looking at the daily charts. But as I said, technicals are same across all time frames. Whatever concept I'm teaching you, you can try it out at any time frame, whether it's intraday or extra long term. That will not make a difference. So on the daily chart, it's very similar to the TCS example. We are currently discussing how can we set stop losses and targets for a range bound market when markets are moving in a range between 2 points. So in this example, you can see very well, my support will come around the 708 level. That's a very, very clean support. You can see multiple levels being tested here. So that becomes a floor. It's a demand zone. The resistance at the same time will be coming over here around the 760 levels. Multiple times that market is touching there and falling down, that level automatically becomes your ceiling. Now what do you do? If I want to take a trade, can I blindly buy support? You can't. We made that clear last time. Can I blindly buy a candle? No. Let's get a confirmation at support. Or if I'm looking to short the stock, let's get a confirmation at resistance. Then we will like to trade. So let's look at some examples. Can you see something like a spinning top doji over here? Or can you see something like a spinning top doji slash hammer over here? So what I'm trying to say is I am getting some kind of a candlestick confirmation at these points. You can also confirm the volumes when you get this spinning top doji at the support. The volume was extraordinarily high, much above that 20 moving average. Also around this spinning top doji, you have got your huge extraordinary volume coming in at that price. So that means that these are the levels that I can look to buy the stock. It's getting multiple confirmations to buy. So when I'm looking to buy the stock, get your long and short tool out. Currently I'm looking to long. I click on that long option. When will I buy? Can I buy on that candle? No, we always wait for the closing of the candle and the highs to be broken. So I can only buy on the next candle. So the next candle I place a buy order. Where will the stop loss be? It will always be below your support. I cannot place a stop loss here. That will not make any sense. You will always get snapped out, or in markets we say you will always get hunted. Your stop losses have to be little bit wider depending upon the market. That's all right, but it has to be little bit wider. Do not just because of limited capital constraints put a very, very tight SL, because that way you'll always lose. You have to put it at a very logical place. So my logical place will only be below this support, because I know if I come below the support, my trade is going wrong. I am going to break down, because below support means breakdown. So if I'm buying over here, SL will come here minimum. What is the target? Can the target go above resistance? It can't go, because that's the ceiling. You have to hit and fall back. That's the assumption we always make. Whether it breaks out or not, we have to make a conservative assumption. So our targets will not be above, but will be below, just below the resistance. Give it some room. So can you see the risk reward? Yes, it is 1:1. So for a 1 rupee risk, I am accepting a 1 rupee profit. That's a good trade. Nothing wrong with it. Even if your SL is hit, nothing to worry about. But the trade that you took was a good trade. Another example can be just beside that. You can see a doji candlestick, a spinning top doji being formed here. When can I go long? Not on the candle. Always wait for confirmation. If you get a bullish engulfing doji, wait for it to be confirmed on the next day. The next day, you can see the highs are being broken. We take the trade on the next day. What's the SL? Just below support. So I would like to put it below the lows of the doji. So it's below support, below low of doji. That's being extra conservative. You can put it over here also, no problem, but this can get hunted. So I will give it a little bit more room. I will put it over there below these lows of the doji. The targets will be the same, just below resistance, no matter how high it goes, but we have to be more disciplined. So right now you get a 1.94:1, which means a 39 rupee profit, but only a 20 rupee loss. So my risk reward ratio is favorable, and I would like to take such trades only. Let's look at some more examples. HDFC. I'm again looking at the daily charts. We'll talk about the intraday charts in some time, but I hope these concepts are clear because they will be applicable. Whatever I'm teaching you, you can apply to any chart. Now look at the charts of HDFC. You can see that this level over here, the 1900 level, is a resistance. So that is a level we will mark it out. At the same time, you can also see some kind of support coming around this region, 1730 regions. Multiple levels of testing being done here on 29th of June, around 16th of July, 4th of August, and around 14th of September. So what do we do now? Let's look at a buy side, and after that we look for a short side. So if I'm looking to buy, I will look for some confirmations at the support. So first confirmation can be something like this. This is something we call a spinning top doji or an inverted hammer candle. That's an advanced candlestick pattern, but just for the sake of it, that's a bullish candle. You can also see some buying happening over here. That's a traditional hammer candlestick. This is something we like to call a bullish Arami candlestick, etc., etc. And this over here is called a doji candlestick. So there are 4 triggers that are happening at the support. So I want to buy when these highs are broken. So when this big green candle comes, I want to go long in the market. So I like to go long in the market. What is the stop loss? Just below the support. What's the target? Not above. The price is going higher, but my targets are a little bit below. So you can see it's a 2.3:1. That's a very, very lovely risk reward trade. So do take that trade. Let's look at the next example. It's a hammer candlestick. I want to go long at the support on the next candle, not at the same candle. Put a stop loss below support. Do not put it just because you have limited capital tight. Put a little bit, give some room to the stop loss. Target becomes a little bit less. So the trade over here is 1.5:1. The trade is good. Let's look at this example. We got a doji candlestick here. So let's say you went long on the stock. The volumes are not confirming. Ideally, the trade was not good because when you got these dojis, the volumes were not confirming. And that is one place, that is one filter that Himalaya has taught you in the candlestick patterns, that if the volume is good, then only take trades on the candlesticks. But let's say you took this trade. What's the stop loss? It will become very, very small over here, and the target will become somewhere like this. So it's a 3:1 trade. So just because you had a very good risk reward trade, let's say you took the trade, not a problem. But what happens is when you hit the stop loss over here, now you didn't go high, but you first hit the SL. You have to exit. Be disciplined, guys. That's what I'm trying to tell you. If you hit a SL, that's the area where I told you the trade goes wrong, the trade goes it invalidates itself. That's a place where you want to exit the market. Do not just sit in the market considering HDFC is a lovely share, let's stay in the trade, after 1 year it'll go good. Because when you entered the trade, you wanted to make money in 3-4 days. Now when the trade goes wrong, when you see red, you get that human emotions again, that let the loss run, let cut the profit fast. Do not get that emotions, because there is a time value of money involved. Initially you are coming in for a 3-4 day trade. Because your trade went wrong, you are not accepting the loss, but you are sitting now for 1-2 months. That is absolutely wrong, absolutely ridiculous trading. If you hit a stop loss, exit, because earlier 3 times our profits were triggered. So if you see this chart in that range bound market, because markets are shuffling between support and resistance, we are making money 3 out of 4 times. And I said 6 out of 10 times is a good ratio. 3 out of 4 is absolutely amazing. So you have to accept that stop loss. I hope this the profit and the target basically, and the SL, I hope this concept is clear. Let's say you are a person who wants to go short in the market. Obviously on a overnight basis you can't go short on equity. You have to go through derivatives like options and futures. Or let's say there's an intraday chart. I want to go short in the market and I see a shooting star over here. I would like to go short. Or I see a bearish engulfing at resistance, I would like to go short in the market, because in trading you can make money both the ways. You can either short or you can go long. Again, for the new people, shorting in on a overnight basis, if you want to do a short for 3-4 days, you can't do it in equity intraday. You have to do options or futures. Again, let's say you are doing options and futures and you want to go short here. What's the target like? So you are getting double confirmation. You are getting at the resistance, you are getting your shooting star and a resistance. So let's go short. Get out your short tool, click on this option over here, short. The stop loss will become just above resistance. Target cannot go below support, above support, because that's a cushion. You are expected to go higher. The trade is 2.6:1. That's a good trade that you can take. Another example over here is HDFC, the 31st August 2020. You got a bearish engulfing, that's a signal to go short. Let's say you took a short over here. We get the risk reward out. The stop is 84 rupees, just above resistance. The target is about here. So that's again a 1:1 trade. It is above support. So it is comfortable, not a very lucrative trade, but it is comfortable because our risk reward is above 1:1. So now it's up to you. And that's the reason why I said maintain a trading journal, because when you take such trades, I might be comfortable with going for 2-3:1 trades, but you might not be getting the accuracy. What we want as traders is accuracy and consistency. So try to see what is the risk reward which you are getting most favorable outcomes. Maybe it's 1.5:1, maybe it's 1:1. So if you are getting good outcomes there, if you are getting good results and consistency there, try to maintain that risk reward and not venture higher. So just because you can get a 3:1 doesn't mean you have to go there. Get your profits out earlier. So that's the reason I said maintain your journal. And the sixth point was mention what is that risk reward that you are comfortable with. So when you are back testing a tons of charts, you can see that 1.5:1 is a risk reward trade that I am very comfortable with, and it's a ratio where I always win. So try out something like that. It will be different for all the persons, but when you are in a range bound market, that's the way how you want to trade. Whether you are doing intraday or you are doing a swing trading, put your SLs and targets just like we have explained you right now. I hope that concept is clear, and I'll see you in the next module for the same series. Thank you so much, guys.